Hello and welcome to today's webinar on using technology to redefine the branch experience. My name is Morten Jorgensen and I'm a director at RBR, consulting company here in London, and I will be your host today. My three guests are Simon Cook, Associate Director at QCIC, Evgenia Ostrovskaya, Business Development Director of Retail and Banking Europe at Genetec, and finally Martin Koffieberg, Business Development Director at Access Communications. Welcome to all of you. Now, before we start, just a few housekeeping notes in order to ensure the session runs as smoothly as possible. If you are listening in, please use the chat box Genetec's Twitter handle at Genetec_Europe to submit all your questions throughout today's session, which will last approximately 40 minutes. We will respond to all questions after the session. We are keen to ensure these webinars are as informative and useful as possible. So do share any feedback and suggestions you may have with us after the seminar. Now, we will be sending out a brief survey over the next couple of weeks. So please fill that in with any ideas and thoughts you may have. Let's kick off today's topic. Now, we are living in challenging times for everyone, and we know that for banks, the last 8 months have been particularly difficult. Branch transformation has been a topic of focus for many years now, and I would say COVID-19 has really accelerated not just some of the trends we're seeing in the market, but also the urgency of acting in order to meet very rapidly evolving demands. And you know, the lockdown, the ongoing social distancing measures have made immediate action really first priority for everyone. And some of the things we are seeing is clearly that consumers are rapidly becoming more digitally driven. Consumers who were previously not digital first mobile banking consumers have been forced to become that. So we've seen rapid adoption over the last few months. We are also seeing, of course, competition, ongoing competition from fintechs, digital banks, non-banks, which are continuing to make a mark. And finally, the retail banking business model remains very strained, with all-time low interest rates forcing banks to focus on advisory services rather than rely on interest-bearing product, which has been the tradition for decades. So, lots of interesting big questions facing the industry. Today, we are going to discuss some of these questions. We probably won't address them all, but we will make an attempt. Some questions that, what are the key trends in the banking industry? What is the role of the bank branch, and what does the future look for the bank branch? How can technology enable bank branches to operate more efficiently and more cost effectively? And finally, what type of internal change is required to ensure successful branch transformation? Now, Simon, let's dive in straight away. You are working for QCIC, a consulting company. You have a number of customers in the financial sector. Can you share with us some of your views on the latest trends in terms of branch transformation and, you know, the role of the branch?
Yeah, certainly, Morten. So, I mean, as you say, we've seen over the last few years a steady increase in, digital online banking. I mean, if we look at most every bank, building society now, they will have a web page or a mobile app that customers can use. There's been a steady increase in internet banks, online lenders, comparison sites. It's all of this makes it much easier for people to, manage and make decisions about their finances from home. Now, it's a blessing and a curse, right? Because what you have is on the one hand, banks can really target services and products, get a better reach for these, but equally it precipitates the decline in traditional branch banking. So really what we start to see is how the changes start to come around actually retaining existing customers and attracting new customers, especially when we sort of live in this world of ever decreasing customer loyalty. If we consider that, in 12 months, in the first 12 months of a new customer is typically a 25% churn rate, right? So banks really need to think about how they actually move from a traditional service model to actually creating more non-traditional services and products and actually creating more of an experience. We're becoming much more in today's world about the experience. Whether it's getting a coffee, it's more of an experience, not just going getting coffee. There's a whole lot to it. There's a DJ playing, etc., etc. So it's all that kind of experience that the banks need to offer their customers. Now, as you've said, there's been an increase in digital behavior, and certainly more than was predicted. With COVID, we see a lot of behaviors changing and evolving, and certainly areas of the population and sort of demographics that aren't typically digitally savvy have been almost forced into using this world, to actually sort of help them live in today's society and live in the pandemic. So Accenture research, for example, showed that you have, what was it? It was something like 25% of the population made its first online grocery order during the pandemic. And I think 40% of those were over the age of 55. So really, we're seeing, that demographic becoming more digitally aware and actually, having to dive into this digital world that, we live in. And the interesting thing that 37% of those that were surveyed actually said that they would continue to operate in this way, and they'd continue to, grocery shop online. MasterCard, they said that 2/3 of their transactions now are actually contactless. So this actually is quite important, and 76% of people that are using this contactless payment during the COVID situation have actually said that they're actually going to continue this and use less cash after the crisis is over. Furthermore, there's been a 60% decline in cash withdrawals from ATM. So again, people moving more to a cashless existence. The positive that we see, though, is that there's about 40% people that were surveyed have actually said that they wouldn't trust a bank that doesn't have a branch network. So clearly, as good as all these figures are, and as big as the digital world is becoming, there is still a place for traditional branch networks. And again, the key really is to look at how we can actually make that change into that experience approach, and retain that customer base, and actually look at helping customers with those sort of traditional requirements, but also looking at other roles that they can play. And again, Accenture research identified 3 clear roles for banks moving forwards. The first is that digital ambassador. I mean, we see it in adverts already that banks are starting to become an advisory service on how to use the interweb, right? All things digital. There's still a lot of concern, especially when it comes to money and the security of money. There's still a lot of concern and a lot of nervousness around that. So, helping their customers guide them through this sort of digital world and ensure that safety and comfort when it comes to using money online. Second to that is the trusted advisor. There's always going to be those life-changing decisions, and money, financial moves that people will make, be it mortgage, be it student loan, be it ISAs, whatever it is, that you need that kind of interaction with another human to really give you that sense that you're making the right decision, to really give you that level of comfort that you're taking. That's something that no application or website can really give you. And thirdly, the problem solver. And this is clear, banks do this today. This is really helping with the day-to-day transactional type activities. So, money lost, money stolen, potentially, fraudulent alerts, things like that, issues with ATM, lost cards, etc., etc. So again, really supporting with those, the problems that, that challenge customers. So again, moving forwards and really changing the service approach, moving from traditional service to experience. I mean, this is something that we're really seeing more and more in the current climate.
Very interesting, Simon. Thank you very much for that. Now, we have a lot of banks listening in today. If I'm a bank and I'm thinking about this, it's very interesting. What are some of the technologies available for me as a bank in order to meet these very rapidly evolving market needs?
Yeah. So the key here really is the security system. Okay, I mean every bank has a security platform, but what we're seeing, what QCIC see more and more is actually how the security platform is evolving. It's not just looking at people and property anymore. It's actually evolving into a business tool. It actually can help businesses to improve efficiencies, to actually change some of their processes to adopt to the ever evolving world. We live in an Internet of Things world now. So more and more devices, more and more plugins that are created, applications, getting all these different devices, these applications talking to each other, and having an open platform to allow this kind of data to be created to actually move us into this business driver. One example here, every bank has cameras. Right? So, with the addition of analytics to these cameras, we can really learn a lot about what our bank, how our bank is doing, and actually how our customers are interacting with the staff and with the bank. So, as an example, I mentioned the digital ambassador, right? If we actually create a digital area within the bank, an area where customers can come in and learn from branch staff how to navigate the digital world, how they can get the best of the application, or even just how to log on with that assurance. We have a camera monitoring that area, or cameras monitoring that area. What we can tell from that is obviously how successful that area is, how it's being utilized, how long people are spending there, what the queue time is like. And that allows us to see, from a bank perspective, do we need to increase the area? Do we need to add more staff? And again, ultimately, all of this to drive to, efficiency and more sort of customer experience. If they come in, they don't have to wait for a long time. They get that level of service. It's a much better experience. They leave happy, right? Also, if we consider the COVID world at the moment, social distancing is very important to many people. We can actually get a look at how the bank is working, where the footfall is, where the what the occupancy rates are, all this type of information that can really help us look at how we better manage that sort of social distancing, in the current climate. And I think, more so when the climate is over, how does it actually change when the world returns to normal, whatever that looks like. Talk about integration. More and more, as I said, we're looking at how devices connect together and the benefit that brings. If we put it as simply as the ATM integrating with cameras, in the COVID world, there's a lot more remote working. So, we have branch staff, but also call centers, branch staff maybe working from home. If people are still using ATMs and they have an issue, having camera integration, with the ATM actually allows the person taking that call from the customer understanding the issue and having more information to work with to again resolve the issue quicker, and obviously with a better level of comfort for the customer. So again, looking at these integrations. But really, fundamentally, the basis of all of this has to be the cloud. QCIC spend a lot of our time working with customers of every sector, but certainly within the banking world, to actually look at taking the transition from on-premise systems that are historically closed and off limits to most everybody into the cloud. And there's many benefits to this, but certainly when we look at some of the topics I've talked about, application integration, adding in other third-party devices to build these kind of different applications that we talk about and benefits that we talk about, the cloud underlines all of this. It allows banks to scale both up and down. It allows banks to move. If banks are changing location, being more trendy and being part of a coffee shop in the corner somewhere, or being in a mall, a pop-up type of application, we don't want to be moving boxes around. We just want to plug cameras in and go. We don't need to have IT staff on site managing all of that. It can all be done remotely. And again, as we move forward, as we connect all of these applications together, all these devices, all of this is giving us a wealth of data. It's giving the banks a wealth of data. So then we can actually look at drawing on this wealth of data. It becomes a data lake. And as we evolve, as our customers evolve, and as the industry evolves, rather than having to wait 3-5 years for the branch transformation to occur, we can access it quicker. We can evolve with the customers and actually have the data driving the bank's behavior and thought process around the ever-evolving customer.
That's very interesting, Simon. Now I'm going to go over to you, Eve, and get your perspective and Genetec's perspective on some of these trends that Simon talked about.
Yeah, thanks, Morten. We're seeing all the same trends which Simon mentioned: analytics, cloud, all this technology move. But we also see a bigger trend, or I would call it more of a challenge, that different parts of the bank or financial institution have conflicting priorities and should work a little bit closer together. So more and more different parts of the bank have these conflicting challenges that should be combined.
Very interesting. It's integration and cloud and analytics appear to be a common theme here. Now, I'm going to go back to you, Eve, on that, but just hold on a little bit. I'm going to go over to you, Martin, now and Access. So while we're talking about technology here, what are some of the practical applications that you and Access are seeing?
In order for banks to remain competitive, they will need to focus on providing a better customer experience by optimizing operational efficiency through fine-tuning branch utilization and staff utilization. Customer research data can be used on defining what the branch experience needs to be, but while asking customers for their opinion gives one perspective, observing their use of the bank branch gives a more accurate view on how banks can adapt its services and operations on almost a real-time basis. Advanced customer video analytics can be used alongside other customer experience enhancers to help banks optimize the in-branch customer experience. For example, video analytics can be used to improve customer satisfaction by reducing waiting times, and by adding background music, the customer experience can even be further enhanced by creating a more pleasant environment that people like to stay in.
That's really interesting, Martin. I want to pick up on some of these things you mentioned. So clearly, analytics is becoming more important, and understanding what your customers are doing in the branch is becoming something you can do real time, which is new. But it also does bring out the fundamental question: what is the role of the branch? I mean, how do you view the branch? How does Access view the branch of the future, the modern branch? Is it an asset or is it a liability?
That's a very good question. I would say, as highlighted by Simon, Accenture has already summarized 3 essential roles for the modern branch. One is to become the digital ambassador, the other one is the advisory hub, and the third one is a problem solver. I would say that people of all ages always need a bank branch, some more regularly than other ones. Banks use their physical presence in a geographic area as a brand beacon, showing that they are an embedded part of the community. And by adding new purposes to branches, such as offering cafe services, exhibition places, or meeting places, bank branches can become what is known as the third place, as Starbucks has invented, a social meeting place between work and home. For this to succeed, however, banks need to continually assess the best locations and branch users to provide the best outcome for the bank, which is increased number of visitors, and for its clients, which is a better experience. Therefore, a bank needs to use technology to optimize these operational efficiencies and service levels by understanding over the course of each day, week, or month how, for example, campaigns can impact on the footfall, how weather conditions can impact on footfall, when queues are more likely to build up, and which areas of a bank are used most. Moreover, video analytics technology is also an excellent tool for implementing COVID-19, as already mentioned by Simon. And by effectively using audio for relaxing background music and for playing occasional reminders to respect the 1.5 meter social distancing, the customer experience and also the customer safety can be further enhanced.
Great, Martin. That's very interesting. Now, what other technology trends are you seeing which could help with the operations, making operations in the branch more cost effective?
It's not inconceivable that in future, subject to privacy regulations, using more advanced video analytics, banks will be able to spot their customers as they come in, and in order to collect demographic information and to provide better services by using, for example, face identification or authorization for touchless ATM transactions. For less complex advisory services, video banking offers a very good alternative low-cost channel. Customers can make an online appointment with their advisor even after office hours. And for more general queries, problem-related questions, smart AI-powered chatbots can be used. I would say that while technology is used to let us work and communicate through digital channels, there is nothing at the end of the day that can truly replace living human interaction from an experiential point of view. Humans are social animals, and so at times they need to come together to keep the relationship going or to work together on ideas, for example. Therefore, digital and physical channels can be seen as complementary channels, where digital is more about and efficiency. A physical channel is more about building and maintaining relationships and trust. So in the end, it's all about finding a new balance.
Okay, that's very interesting. Now, I'm going to go back now to you, Eve, something you said earlier on, the point about you were implying that there is a need for cross-functional and cross-departmental cooperation within the bank in order to make things happen. Can you expand on that?
Yes. So Simon, Martin, we're talking about different technologies, and banks need this ability to develop a single customer view. So bringing together data from different systems, from analytics, and then you actually need to put leverage machine learning on top of it and put deep learning tools to deliver financial solutions where, when, and how customer desires. To provide a better experience in every step of the customer journey, financial institutions need to improve the quantity and quality of data, but then they actually need to learn how to filter the data down to have less information to the relevant stakeholders. So once equipped with this information, I think banks can better understand not just how personalized promotions, where they actually use this data a lot at this moment of time already, but also it can be used for business planning and projections. So from the Genetec perspective, we have been working with our customers to educate different stakeholders that the systems can be reused not only in security, but in IT, in operational managers, in marketing, and so many more. We are working with our customers, and they are trying to use the system to its full capacity within the requirements they have built. So the question is now, who built the original requirements for security systems? And normally, when the new requirements come in the picture, it's been treated as the standalone problem with the standalone solution. And when we see that we bring in another silo system into the picture, it will increase the cost of ownership, it will increase the cost of maintenance, and practically we will just have many systems which can be combined. So 80% of our clients still don't have a strong cross-organizational, I would call, advocate in team, but individual leaders who are briefed to deliver and optimize a video part, mainly around the security function. So typically, they would work in a security team with extremely high workload, with extremely low budgets, and would choose the function of video to deliver the function of video. Another 20% of our customers go beyond security while using physical security systems, exactly like Simon and Martin mentioned, adding value by measuring customer insights, adding video analytics for security and non-security applications, and adding these functionalities along the road, along the journey, while the systems is growing and the reality is changing, like with COVID these days. And we solve completely new challenges using existing applications. So we see it not only in the banking world, but the same principles apply in any multi-site customers. Talking about Starbucks, my client at Starbucks, he, while preparing the system design of the security project, was collaborating with operations and marketing. And we see the customer satisfaction statistics are showing improved customer experience in the branches where they were measuring customer behavior, analyzing customer behavior, and they put an action behind this process. So they put internal resource behind the process using this data. So these different approaches normally depend on overall culture of the company. Companies with the clear focus on collaboration between different departments and stakeholders normally go for more open platform and therefore future-proofed solutions. And what we see is the ending result, it's a faster and higher return on investment. So to go a little bit deeper in that question, we see three models of structure of organization. First, it's when security team owns a video subsystem or security subsystem. It's much more than video. It can be access control, fire alarm integration, and many more. But normally they treat it as the standalone technology from the rest of organization. And normally we see that in this model, they are primarily supported by the system integrator. So integrator talks with the security team, they create the requirement, and then integrator delivers this standalone security function. Second model is when a security team owns the systems and the budget, but they have a strong cross-organizational advocate. And normally this person works with IT, with operations, with marketing. They ensure that the video system is compatible with other organizational IT needs and direction, and satisfies security requirements as minimum, but not only. And the third model is when IT team owns the budget, security teams gives the requirement, but doesn't have any right to decide in the end. So IT gets business requirements from security, and security team then just gets what they asked for without even the possibility to move. In our view, the second model is the most successful. And just to give it very practical example, when it goes to those different priorities and not really good cross collaboration, is with the COVID situation. We have video system pretty much in every branch. What happens when we need to measure occupancy? Operations just go to IT, they ask, we need to count people. What they do, they bring completely different sensors, they install different subsystems, which is not interconnected with one another. And we have two systems, we have two different stakeholders, we have two different systems to maintain, to support, and so forward. When we could just add a little add-on on the video management just to make sure that it just gives another feature like occupancy. So once again, it's all about cross-organizational collaboration, which needs to be actually resolved first before we even introduce the technologies.
Thanks, Eve. Really great and interesting perspective. Actually, I know we are about to run out of time. I'm just going to share a couple of points from RBR's perspective here. Now, we see banks across the world making significant strides to evolve their business model and to transform their branch networks. It's clear that COVID-19 has been a massive challenge, but it's also, I would say, it also offers really an unprecedented opportunity to innovate and to undertake transformational change much quicker than would have been possible without the burning platform that the pandemic represents. We've heard from Martin, Eve, and Simon, really the need for agility, for integration, and the opportunities that technology offers in terms of not just tying the organization together, but also, of bringing everybody together and forming this unified view of the customer, which ultimately will make the organization more competitive, more responsive to the rapidly evolving needs of consumers. So let me summarize key takeaways that I'm going to leave our webinar with. Firstly, branch transformation has accelerated with COVID-19, making it really a necessity rather than a nice to have. Secondly, the branch of the future is built on trust and on offering relevant services to consumers based on an understanding of their needs. And third, measure really. Technology offers the opportunity to, in real time, understand the evolving needs of consumers and respond to them. And we need to be much better as banks in terms of understanding really the essence of the customer experience. And technology allows that already now. And fourth, data is nothing without the internal processes. This is what Eve was just talking about. You really need to ensure the organization, the culture is geared towards these other changes that technology enables. So The technology in itself is not enough. The data in itself is not enough. You need the organization to be tied up in the right way and the culture to be responsive to the insights that will be gathered. So thank you everyone for tuning in. We hope you found the webinar useful and valuable. Thank you to Eve from Genetec, Martin from Access Communication, and Simon from QCIC. And thank you for listening in. Be safe. Thank you.